All right, guys, so we got our latest CPI data, and the rate of inflation has gone up 0.5%. What does that mean for gold and silver? It doesn't mean a whole lot. It just means that inflation is not coming down, number one. Number two, it tells us a little bit about the Fed's roadmap and what they're going to think. All right, so we talked about this a couple videos ago. I mentioned that we have to know exactly what the Fed is going to do before the Fed is going to do it. The Fed is not looking ahead. They're not looking at the data that normal people look at. What they're looking at is they're only focusing on the CPI numbers, and they're focusing on the job numbers. That is the Fed's initial or only mandates that they are required to look upon. The latest job numbers that was released back in January, those were, good job numbers, right? But we all know what happened. They moved the goalposts. That gives the Fed, even though that there isn't great job numbers, that gives the Fed the ammunition to go ahead and say, well, since we have great employment numbers, we can continue raising interest rates. And what is that going to do? That is going to drive down prices of your gold and silver if the Fed does continue to do so, despite what all the experts have been saying, and they've been dunking on all of us here in the coming months, talking about a Fed pivot. Well, the Fed is not pivoting. The Fed is not going to pivot probably for quite some time. Inflation is still too high. They have a target percentage that they want to keep year over year, whether you agree with that percentage or not. That's not for debate. What's for debate is whether or not they're going to get there. And I know for a fact they're not going to get to 2% inflation. That's just not going to happen. But what we can decipher from the information that has been provided to us is that the Fed is going to continue to raise interest rates. Now, we know that there is one more planned rate hike. So what can we do as stackers? What can you do to maximize your potential to load more ounces into your stack? Number one is you can wait. You can wait. You can save up your cash and then get ready, because we all know what happened last time that the Fed raised interest rates. The prices of your gold and silver, they went down, right? I want to say silver dumped 5 to 6 or 7%, somewhere in there. Gold went down, I think it was like 50 bucks maybe. So we can plan for that. What we got to do is we got to take that information that the Fed has given us, and we got to plan it out, okay? We know that at least not the day of that the data is released, but at least the day or the day after, there's a high probability that gold and silver is going to dump. And we know that because what that does is that puts downward pressure on gold and silver, because what that does is in return is it pushes the DXY, the dollar index, that pushes that a little bit higher. Now, the DXY is definitely trending in the wrong direction, but in the right direction for your stack. And what I mean by that is the DXY is trending down, 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 down. In return, it should be a good sign unless the Fed has information like those job numbers. If they get those same job numbers for February, I have a good feeling that the Fed is going to continue to raise interest rates. We just have to wait and see. But we know we got that one more rate hike. And we know that the Fed is going to raise the interest rates, but we just don't know how high. Now, the consensus is a quarter basis point. Now, whether or not the Fed raises that to 50 basis points, I don't know. We'll have to wait and see. But we know we can plan for that, and we can save up. We can get ready to disperse our funds and put it into here and add a little bit more value to your stack. That's what it's all about. That's what stacking is all about for me. Now, as far as which one you should and shouldn't buy, I can't really answer that question for you. I can only tell you what I'm going to do. It's probably going to be another gold piece because, well, it's the better performing asset over time. And that's what's important to me. Now, I have been buying a little bit more silver here lately, and that's only because I needed to rebuild some of the stack that I let go. That doesn't mean I need to be heavily invested in that. I'm only going to buy silver in 2023, like some dude wearing lipstick has said. I'm not that type of dude. I'm only rebuilding what I actually let go of. That's the only reason why I'm doing it. As far as I'm only buying, silver in 2023 because it's going to be biblical. That's horse shit. I mean, let's call it what it is. It's not. It's not going to go to a moonshot. It's too high up in the market cap. Okay. It'd have to double for silver price to double. It has to double in the market cap. So you're telling me somebody needs to pump another $1 trillion into the market cap that's already there? It's just not going to happen, guys. It's just not. I just don't see that. And even if it does, it's not going to sustain. It's just not. So I want to manage expectations, and I want to help you make a conscious decision on what to expect. Okay. That's just like gold doubling. It's not going to happen overnight, guys. It's not. Just look at the market cap of gold. It would have to double. If to get over 3,000, it would have to double from where it's at right now. It's just not going to happen anytime soon. It's just too much capital that has to go into the market cap for it to do so. Hindsight's 2020. What do we know? We know the Fed's going to raise interest rates. We got a plan for it. Let's do that. Let's make the right decision. You make the right decision for your stack. I'll make the right one for me. All right, that's going to do it for today. Appreciate you watching. Don't forget to like, comment, and subscribe. Keep grinding your stack.